So hello, you're all very welcome here today, and A&L Goodbody is delighted to co-host this European Women in Payments network event, bringing the ESG to payments in Ireland. The European Women in Payments network was launched in Ireland in 2019 with the appointment of Alison Donnelly as the network's ambassador for Ireland. The network's purpose is to build a supportive and collaborative network for women in cards, fintech, and payments in Europe. It strives to create more opportunities for women and minorities to network and to showcase their skills and talent to the wider sector. Past network events provided insights into the payments sector and the career opportunities and pathways leading women in payments have taken. It is wonderful to see such a large turnout to discuss the topical and far-reaching issue of ESG, an area of such significance that here in A&L Goodbody, we have a dedicated team bringing together specialists from across the firm to assist clients in navigating the constantly evolving ESG landscape. Today, we are focusing in particular on the promotion of the ESG agenda in payments, and are pleased to welcome a distinguished panel of experts to the stage. So I will now hand over to Alison Donnelly, the network's ambassador for Ireland, to chair the panel session. Thank you.
Thank you, Shan, and thank you everybody for coming. It's my pleasure to host this event today. It's been a long time coming because we as Shan said, we have been meeting virtually, remotely, as is everybody else, but it's lovely to see you all here in person, and it's my absolute pleasure to introduce this panel of experts, and I'll let them introduce themselves because they'll do a much better job of it than I will. So let me move to Aideen first.
Thanks, Alison, and good afternoon, everyone. My name's Aideen O'Leary. I'm an independent non-executive director involved with two charities here, Irish Youth Foundation and Charities Institute Ireland, and I'm about to be on the boards of two financial service entities as well. So that's one arm of what I do. I'm also an independent ESG investment consultant, so I would help institutional investors mainly when it comes to selecting their asset managers when there's an ESG mandate attached to it, and help them build out their what ethical investment or ESG investment means for them today in terms of what they're looking for. And then another hat I wear in the ESG space is I'm on the ESG working group for the Irish Fund Directors Association, so looking at all things ESG and sustainability, but through the lens of the fund board, I suppose. And then I suppose most relevant, and the hat I'm wearing today, is as a co-founder of an initiative called the Green Team Network, set up in the first instance for members and firms in the Irish funds industry to bring them all together to share ideas, thinking, initiatives in relation to tackling climate change. So a forum to bring the various entities together on that, but increasingly branching out to the wider financial services industry here. So that is me.
Thank you. Louise. Hi, I'm Louise Hogan. I'm on the financial regulation team here in A&L Goodbody, and I advise payment institutions and electronic money institutions mainly on everything from authorizations, governance, conduct of business, and then I suppose whether new products would even come in the remit of being regulated. And then I suppose the firm itself, as Shan said, it's really the ESG, I suppose ESG requirements and practical tips are things that are really our clients are looking for, and where every practice sector across the business is working in this area. So from things like insurers, banks, aviation, or in construction. And then for our own firm, we're really trying to drive ahead on those ESG type factors for our own business as well.
Great. Hi guys, I'm Owen Leonard, and I'm the Chief Executive and founder with a company called i3PT. That's what happens when engineers are put in charge of marketing. So we come up with an acronym I spend my life explaining. But it stands for Independent Third-Party Testing, and we work in I'm a little bit of an outlier here, so I'm not in payments. We work in the property and the real estate sector, And we principally work with financial market participants and multinational corporations working on their property portfolios. Obviously, construction and real estate is a very carbon-intensive business with a huge challenge ahead of us. And what I do is I principally work with the funds and with our teams to assist them with decarbonising their portfolios and making sure that when they do build things that it doesn't cost the earth as much as it should do. Okay.
Thank you. And Anne.
Thanks, Alison. Hi, everybody. I'm Anne Shields. So I run my own sustainable finance regulatory consultancy called FinLexes. So that's a combination of finance, lex being the Latin for law, and sustainability. I am, by trade, I'm a lawyer. I spent over 20 years working in the Irish funds industry, a lot of those years in this building, actually. So it's nice to be back. I also hold a certificate in sustainable finance from the University of Cambridge's Institute for Sustainability Leadership. I lecture at the Institute of Bankers here in Dublin in responsible and sustainable finance. And full disclosure, I'm on the steerco of the Green Team Network with 18.
You can tell we've got a very distinguished panel here. I fortunately have the opportunity to question them first, but there will be an opportunity for you to put your questions to them later. And then after that, we're going to put you to work because there will be a discussion group. So be prepared that you'll be asked questions and be able to contribute to the whole wider discussion. But first of all, let's set this in context. ESG is very topical at the moment, but it's not new. Can you give us some background on it? Where has it all come from? And I'll go to Aideen first.
Okay, well, I suppose it's hard to say exactly, to pinpoint where it all started. You know, if you go back before ESG was a term. But I suppose back in the 1960s, and even Anne reminded me recently that even further back than that, when the Quakers were interested in investing responsibly. But back in the 1960s, I suppose, in terms of institutional investors, say charities in particular, took an interest in, within their investment portfolios, screening out those kind of sin stocks as such, so avoiding investment in armaments, tobacco, mining, like straight out investing in a mining company, that kind of thing. So there was that kind of initial awareness there, but that seemed to be very kind of niche. So it was about the do no harm side of things. Fast forward kind of into the, say, early 2000s, and I think some of the kind of governance scandals and some of the appalling things that were going on in, you know, socially or otherwise in some companies kind of focused attention maybe more on the social and the governance side of things, and increasingly, and some environmental disasters as well. And in addition to kind of just charities and those type of investors being interested in do no harm, there was the do no harm was of more wider interest to other investors, but also with a do good while you're at it. So that has been bubbling away in the background since the early 2000s until really the last few years, and all the data came out and the scientific evidence about the awful damage we're doing to the planet and the kind of governance focus area again. And all of a sudden, I suppose, in the last few years, everyone's interested and it's become a mainstream thing. So in the investment area, I suppose, is where you probably saw it first. And ESG, the term, got coined as a result of a report in the 2000s. I'm trying to think of the name of it, something about care or we care.
It's who cares wins.
Who cares wins. Who cares wins. And it has taken on, you know, whether you're an advocate or a critic of it, it has evolved to today and across all sorts of businesses, not just investment.
And do you see that across businesses, that the context has moved on?
I think so, yeah. And so the Who Cares Wins report came out in about 2004, 2005. So that's a United Nations backed initiative. And that's really when you first heard about, you know, so ESG was created really to be a set of tools to help financial decision making, to integrate social and environmental issues into financial decision making. I think that's a really important baseline to have for ESG because that's where it all started. And as Aideen said, before that, you know, responsible investing, you know, was a thing far before 2004, 2005. Definitely has moved on from that. Now, I think ESG has become a set of criteria, you know, kind of swept into risk management for boards, for organisations. I think there's a distinction to be made between kind of real economy business and financial businesses. I think the financial sector very much an enabling sector for sustainability issues in the real economy, and I think it has a really strong role to play there for a couple of different reasons, not least because to deliver on ambitious targets like the United Nations Sustainable Development Goals and the goals of the Paris Agreement, no public purse in the world has the money to deliver on those goals, so they need private capital to steer money in the right direction in support of those. And I think in the payment services industry, I was trying to think, where does it fit in? And I think it's somewhere in between, real economy businesses and, financial institutions like banks and insurers. And I think that means, you have to have quite a different, if you're strategizing this, you need to think a little bit differently about it. But certainly lots to work on in between the examples that you can draw from those two sectors.
Yeah, I think specifically on the regulatory side, I suppose payments by their nature should be sustainable. It's a paperless online way of doing payments. But I think ESG and the meaning of that has evolved into payment institutions either embedding kind of ESG as an agenda in its own institution, or a lot more ESG products or payments products that are really trying to solve some of these problems. On the regulator side then, there aren't sector-specific requirements for payment institutions in the same way that there would be for banks, insurers or asset managers. But the clear expectation of the regulator is that all regulated financial service providers are meant to be showing leadership in this area. And then I think the third thing really is investors. And if you're looking for investors in a payment institution, are they going to be asking about diversity? Are they going to be asking about those other ESG factors and how, they're embedded or not in your organisation?
Oh, and you're clearly making a business out of the ESG imperative and particularly with the environment side. Will you tell us a little bit more about what you do and how that's evolved over this time?
Yeah, sure. I think we had, my company was established in about 2012, made absolutely no money for the first 2 years. So really, I think 2014 we started properly trading. And I think it took probably about 4 or 5 years for people to really start caring about sustainability in the first instance. So if you went back to 2018, for us, it was probably about 10% of what we did. We had a whole other side to our business that was focused on an arm of what would be considered ESG now, which was safer communities and safer environments. If you think about something like the Grenfell disaster, that was a big part of our business, was preventing situations like that. But in the last 2.5 years, in particular, the focus of investors on ESG, and even in the last 6 months that has ramped up enormously, but the focus of investors and their behaviour on ESG has fundamentally changed the way people consider it as a risk. Climate risk is investment risk in the property and the construction industry at this point in time. Where they focus their resources, their priorities, how they look at their portfolios and how they make investment decisions has completely changed. And when you mentioned a moment ago the impact on real economy businesses versus financial services and various other business models, one thing is consistent, that investors across the board are looking to place their money in companies that have good ESG practices. And I think to Aideen's point, I think Anne touched on it as well, this isn't new. Sustainalytics, Morningstar, people like that have looked at companies and they've evaluated them on environmental, social and governance characteristics for a long time. And it wasn't necessarily all about saving the whales. It was looking at companies who could be a bad bet in terms of their price volatility, their earnings volatility. Okay, so there's a company called FM Global, and they went and they published something called the earnings to risk ratio a number of years ago, and they saw an enormous correlation between companies that manage physical risk badly, thinking of climate risk and other risks, and their earnings and the share price volatility. Similar things happen where you don't have good board diversity. If you have a company that's entirely chaired and has a board of 25-year-old Stanford graduates who are all male and lack diversity, there's a better chance that you're going to have some scandals in the future. Whereas if you had a little bit more maturity and a little bit more diversity, statistically that's less likely to happen. Okay, so there's a lot of scenarios in which they're going to trend and they're going to model things like that and identify that risks are lower in certain types of businesses. But in our industry, it's become very real, and it's become, I think, in the space of about a year now, I think it's become a very standard thing across the industry that ESG is considered in every single investment, and to a large extent it's dictating prices and it's dictating values in the industry, and that changes everything. So I think it has the power to do an enormous amount of good, even if sometimes the people who are making those decisions aren't necessarily always doing it for the right reasons. Okay.
You mentioned there investors driving change. You've mentioned governments, UN, and then you also mentioned Greenfell disasters driving change. What do you think is the most sort of effective way of driving change, and what's happening now that's really putting the pressure on or making the difference?
The biggest change in our experience has been government regulation, and not just local government, but the EU taxonomy, which was published in the 1st of January. Well, it was not published, but it came into law on the 1st of January this year, has had the biggest impact, without question. And the main reason for that was that you will have seen in recent months, recent weeks, certain financial market participants have been accused of greenwashing. There's been raids on offices, all kinds of other things are happening around the world. It would be difficult in some cases to prove greenwashing because we didn't have a standard that dictated what the financial definition of sustainability was up until now. But now we do have that, right? For a whole bunch of activities at least. So for me to say at a certain point in time in 2018 that X% of my assets are ESG aligned was virtually meaningless. It was like me saying they're terribly, terribly good, right? Because, what's your version of terribly, terribly good, right? But if I have a standard, which I now have, right, I can evaluate it against that. So if you think of the Volkswagen emission scandal, really, really easy to prove that they were cheating because we had a defined standard that we could measure them against. We now have that for a whole host of activities. So that type of regulation, if it's considered and if it's done in the right way, can be enormously impactful, because there's now a financial definition of sustainability for new construction, ownership and acquisition of property, and a whole host of other activities which are big polluters in our economy, right? So for me, that's the biggest impact that can be had.
So you're going for government. Anybody else?
Well, I'm going to quote Owen back to himself, actually, because I was at an event a few weeks ago where I thought it was the clearest, for anyone trying to make the business case for ESG to their colleagues, their boss or whatever. There were three fundamental drivers, and Owen can correct me if I misquote him. But one was because you have to. So the regulatory, the risk of penalty, or, you're going to be in trouble, basically, right? The other driver was that you see a commercial value in it. And increasingly, as your consumers and different stakeholders are looking for you to behave responsibly, that's a pressure. Otherwise, they're going to go elsewhere. So the commercial value. And then finally was the, because it's the right thing to do. So the kind of moral side of things. So I do agree with you, though, they're a huge driver at the moment. And if you ask people to honestly say, is the kind of fear of, geez, are we covered on the regulatory side of things? Are we doing what we're doing? But, I think increasingly the other factors come to bear too.
I think in payments specifically, probably it's consumers that are driving it as well. And I suppose consumer adoption of, like, if you take the E part, like products like Bonsai Payments, they're a payment institution in Belgium, and it's like for 10 transactions you do with them, it'll plant a tree. And I think we talked about whether, that's actually driving consumption. But there's other ones, like, for example, MasterCard have a calculator where you can calculate your carbon footprint of your transactions. And I suppose just like the demand of consumers for those kind of things. But I think in payments anyway, I suppose if you take the S side of ESG, financial inclusion was always a big part of payments and what the solution is trying to do. And I think that's only increased as well. So there was, last month, the FCA authorised Algebra, and that's, I think it's an e-money institution, but what they're aiming to do is target Muslim consumers that might have previously been unbanked, and that it's kind of an ethical payments platform, and maybe that's something where there was a gap there that people didn't want to interact with the payment service providers that were already there. There's so many, I suppose. Just taking another financial inclusion one, Prompt Pay is like, it's a big payment service provider in Thailand, and what they're doing is they're allowing people to use either their national ID PIN or their phone number to do payment transactions, so you don't need to have a bank there. And I was reading an article that was saying that 60% of the country have now adopted that as a payment method. So that's both, I suppose, good business and a good solution for people that had previously been kind of unable to access electronic payments. And then specifically, I think to bring together the regulatory side of it again, on the governance side, I think it was only 2 months ago that payment institutions and e-money institutions had to respond to a Dear CEO letter from the central bank that was talking about governance and, you know, how your board is operating, you know, if there's effective oversight there. So on the governance part, you know, there have already been a lot of work done, I think, in this sector as well.
Can I just make a point between, I think we need to kind of distinguish between policy and regulation. So if you're a regulated financial services firms and you're caught by the regulations, you're caught. Government policy, for example, doesn't necessarily dictate what you need to do. So you look at the Climate Action Plan or the National Development Plan or the Sustainable Finance Roadmap, okay, all policies in Ireland. So they're really clear, I guess, guided or certainly direction of travel, what's getting support from national level. And I think if you're looking at those and you're thinking about your strategy in terms of those, I think that's quite a good thing to do. Difference kind of between voluntary and mandatory. So if you look at, so the taxonomy is voluntary right now. Apart from the one reporting clause that says you need to report, okay? But other than that, it's voluntary. It doesn't cover every sector, like you said. So I was at an event this morning, and someone in the food packaging business, agriculture isn't in there. So what do you do? You know, what do you do about that? And also it was kind of interesting to hear, there were some stats this morning and these were all mainly real economy businesses and how they are decarbonising, and everyone is at a different stage. But they asked kind of five questions about what's driving you doing this. And actually the last one, and I was a bit surprised at this, was regulation. The last one was regulation. So I think, you know, again, if you're a financial institution, you really, really have to prioritise the regulation and keep an eye on that.
So sorry, the last thing that was influencing, as in
So
the least
kind of,
influential was regulation.
The least influential, which, you know, so I kind of was talking to a few people afterwards, kind of going, well, you know, why is that? And I think it's sectoral differences and different regulations in different sector. Okay. Yeah.
And I do need to let you come back on the consumerism, the tree point.
Sorry, Alison was kind of remarking I kind of rolled my eyes very dramatically when we started talking about planting trees. You know, planting trees is great, sorry, it's amazing, and obviously deforestation is an issue, but it's not enough. You know, it's simply not enough in terms of decarbonising. You know, you can't plant enough trees on the globe to be able to absorb the amount of carbon that we're emitting, so we need to find different solutions. And just the link with the likes of the cards that, I guess it's, for me, it's sustainable finance when I look at things like the credit cards that, you know, monitor your sustainable behaviour. I think really what they're trying to do is influence consumer behaviour rather than actually directing money towards impactful activities. So that might be the one that's, but still good to see it.
Thank
Well,
you.
plus as well, if you plant a tree today, you're not going to get the benefit for some years to come of, you know, it as the carbon sink side of things. So, you know.
So if it makes it that long.
Yeah. I'm
Somebody
not
hasn't
saying
torn
don't
it
do it. It has its place, absolutely. And, you know, even the Green Team Network, we were talking about getting a group of people out, you know, collectively and doing an activity like that because, yeah. But
I often think these things can all seem very overwhelming when you look at E, S, and G, and if you're some people here are from payment and e-money institutions and perhaps relatively small, or they're busy focusing on survival. Where do they start if they have to start? Not if they have to start, if they're only starting. What do they focus on? Do they tackle one of those letters in the first instance or tackle them all? What's your advice? Who'd go first?
well, I'll give it a go. And now, full disclosure, I'm not from the payments sector either, but I mean, there are certain things that are going to apply, whether you're financial services or another type of firm. And you can either, in my opinion, start with the E, S, and G, or you could maybe, as your kind of starting compass, and see, well, you know, where do I fit under each of those? Where does my organisation currently fit under each of those? Or another place to start that can be helpful is the UN Sustainable Development Goals, the 17 different goals. But to pick, you know, either or both, to be honest, to look at and to try and kind of identify for your organisation what are the priorities, you know, of our different stakeholders, our customers, our employees, our shareholders, you know, across environmental, social, governance. I mean, we can take it as read that good governance is needed everywhere, right? We won't, like, you could spend a whole afternoon on that alone. But just in terms of like looking at those kind of as reference points for kind of these are probably our priority areas. Or when I look at sustainable goal number 5 or 10, I can see that that's somewhere we could really have impact, or that is important for us to have impact, or it's where we currently have most impact now, but we want to have more impact, or it's expected from our shareholders or our customers to have it elsewhere. And also, and without going down a complete rabbit hole as well, to kind of look from those list of options in each of the ESG or certain sustainable development goals. I mean, which ones are most material? And there's a whole discussion you can have around materiality, but material to your bottom line, you know. So, like, that doesn't give you a very definitive answer, but to have a starting point based on working out your priorities and having those discussions, and then taking steps to establish your baseline. Now, in an ideal world, you involve the various different stakeholders in the discussion, because different set of priorities for different groups. But so, you know, you make an attempt to measure where you are, and through all the different parties work out where it is you want to be. It sounds all very common sense, and I'm not getting into any kind of technical language you'll notice here either. And then just, yes, to answer your question about do you do E, S and G, I think in practical terms, if I were sitting with an organisation, say you do want to at least feel you've addressed all of them, but you're obviously, depending on your particular sector or industry, you're going to have more emphasis in one area perhaps for a particular reason than another. And to, you know, not to try and be all things to all people, to not overlook any one, but to look at where you're going to have most impact, if that makes sense.
I think if I can offer something, and it for me the biggest thing is to not to tackle it operationally and tactically from the beginning, is to have a strategy. I think you're saying the same thing, Aileen, which is, if you first and foremost understand that your ESG strategy has to support your business strategy, right? Because if you tackle a whole bunch of things that are A, unaffordable, or B, you can't achieve, and I'm not saying you're not ambitious, you should be ambitious and you should try to do the right thing as much as possible, but you need to have something that fits with your business and what you do. And as an example, if you're looking at environmental, Louise made the point a moment ago, almost by definition, payments companies should be low carbon, right? But your value chain may not be. Right? We talked about crypto and data centers, which I know a lot about, and the impact of those types of things. Okay, so you need to ask yourself, where is the bad, where is the E problem in my organisation? It's probably not within my own four walls. And what can I do about it? Right? Can I have an impact within my value chain? Planting trees is great, but you start with your value chain. In our industry, you could plant an entire forest, but it doesn't count towards your net zero goal until you reach a certain reduction on your emissions within your value chain. They call it beyond value chain emissions. Okay, so when I'm looking at E, you look at your value chain and you see what you need to do there. Can you influence the people that you provide business to do better? If you're looking at S, most likely that's where you can do the most amount of good. And again, you accentuate the positive, do as much good as you can do within that. And the governance is, for me, principally about doing those two things very, very well, having good oversight within your board and reporting and measuring what you do as well as you can possibly do. And digitalization is something that's quite native to your organization, so you should be good at that. So again, but start with a strategy, have a clear vision and a direction to travel, and then measure yourselves against that. Too many companies tackle it in piecemeal. You know, I'll sign up to this initiative because I saw my competitor did that, so I'll do that, right? And these guys over here have signed up to 4 other things. We were chatting about this earlier. There's hundreds of ESG initiatives you can sign up to. But don't do it because your neighbour did it. You know, do it because it fits with your organisation and your goals and your vision and your strategy. Yeah, I think sorry, but I'll finish on this one because it was something that I meant to say earlier. It was somebody said at one point that it's not enough for companies to do well; they must also do good. but in order to do good, you must first do well, okay? And that's my point about it has to be something you can actually sustain. You shouldn't pick up an initiative and realise then it's actually far too expensive or difficult to do and drop it. That's the worst thing you could do. Sorry.
No, I was just going to say on the point about there being so many initiatives out there, like there is help and support out there in the market. You don't have to start from scratch, and I think that's kind of the flip side. The good news about all of those, yes, navigating your way through it and finding the one that suits you is a tricky bit, but again, there's help with that. And I think, you know, even looking at, you know, best in class in your industry, because inevitably the big ones like the likes of Visa have a massive sustainability report. It's about, 53 pages long, you know, and all the things that they're doing. But I mean, they've gone down the road of, they have their own green bond framework, you know, they're an issuer, for example. So there are plenty of things you can do. And I think at this stage of the evolution of ESG and sustainability, there is lots of help out there and support in terms of frameworks and standards, and also examples from competitors and peers in the market.
And just to echo that, I mean, yeah, exactly. You don't have to start from scratch. There is so much resource out there. There's so much of it, though, that it is overwhelming. So I think what you'll find is, though, that people who are kind of immersed in the ESG sustainability space will often be, you know, if you know someone who that's their gig, they will usually have figured out themselves what works for them as a resource or whatever, and can possibly signpost you. So you don't have to just go on Google and, you know, whatever. I would draw on the contacts you have to give you a bit of signposting.
It shouldn't be a competitive matter.
It shouldn't be a competitive matter, and actually, I've heard that term, co-opetition. I think, and I think it's kind of...
You heard it here?
Yeah, and actually, in the context of the network that, say, Anne and I are involved in, the idea is you would have competitors side by side sharing their stories. This is what we do in our organisation. Yeah. So it doesn't mean you have to share all your trade secrets, but just in theory, if we're all serious about this, then you want to raise everyone else's game as well. So if you can help the collective, why wouldn't you?
I think the only thing I would add is, I suppose, use the skills you have. So, for example, here we're lawyers, so what can we do on the S side? We do a lot of pro bono. Everybody has to do like 5 hours minimum per year. That's something, I suppose, the resources that we have that we're using. You know, we're in the East Wall area. We do a lot of outreach there in local schools and things. So I suppose using the environment around you and seeing how you can improve that.
Thank you. I feel sure you've got plenty of questions to ask. Can I throw it open to the floor and if you could indicate to me if you have a question? If not, Kathy, I'm coming to you for your question because I know you had one.
Thank you. My question is around the role of boards, and how do you get boards to buy in to whatever message you want them to take on board, because ultimately they're setting the strategy, they're setting the direction of the business, and it's not going to happen without them. So how can you motivate a board to take this really seriously without regulation?
So I agree, tone from the top in any organisation is really important, particularly when it comes to sustainability, because it permeates every part, or it should permeate every part of the organisation. I think a good starting place is making the business case for sustainability. You know, we've already talked about that, because it does have it has bottom line impact. It has impacts such as, you know, talent attraction and retention, managing risks, reputation. So I think, you know, if you have... I don't know whether you get someone external into your board, whether there's some skill set already internally there. And often within an organisation, it's like Louise said, kind of use the skills you have. There is someone who is a sustainability champion or understands the issues. But I do think that making the business case at board level is quite an important first step.
And assuming you do have someone or a group of people who can make that case to the board, I think in an ideal world, you want someone on the board to almost be the champion of sustainability on the board as well. So you could have all the you know, the people in the world in your company, you know, technically they might have a sustainability in their role, but really if they don't have that backup and buy-in, which is what you're saying, from the board, it'll only go so far. So I would nearly think it's like, I mean, I'd love to tell you that we're at a situation where we don't even have to think about sustainability, that it's automatically embedded in all the decisions around the board table, but we're not at that point yet. So I think, you know, for the foreseeable, and some may disagree with this, at least ensure that ESG and sustainability is a board agenda item, or either a standalone item, or better still, that when it comes to the different elements of the board reporting, that it's part of each report, like whether it's, I don't know, financial, HR, whatever. That's in an ideal world, so that we get to the point that in a few years' time you'd like to think it's just barely mentioned as an additional, it's just an additional lens, an additional risk and opportunity measurement. But if it's not on the agenda, being covered either within each section, or I think it's essential it goes on and stays on.
My question is more around the environment element, and you talk about trying to find out where you are as a baseline and then working from that. How do you get the information to figure out what your baseline is? Because that seems to be a big problem, is be it data or be it what you're doing. And you talk about trying to get your value chain. A lot of the time your value chain don't know what they're doing either. So how do you sort of help to try and manage that?
There are tons of consultancies in that space, right? Not us, but no. There's lots of people who do that type of work, and there's the Big Four do a lot of it as well. We specifically do it in construction, so we're no good to you, unfortunately. But I think that you're right. There's a huge problem with the value chain. We work with a group in a big fund in the UK. They're a pub group. They're like a small Wetherspoons, and they have an enormous challenge because in the next couple of years they're going to have to track their Scope 3 emissions, which means everybody producing pork scratchings to bottles of water, and how they measure what they call the beer in hand costs have to be measured, right? That's an enormous challenge. You're talking about inns out in the middle of nowhere where they're using heat and gas and things like that. So when you get into the value chain in this type of stuff, it is enormously difficult. And in a way, accuracy isn't really the point at this stage. It's more about influence. It's more that you ask, and you start to ask better questions, and you apply a little bit of pressure to your value chain over time to actually do better. And we see it ourselves. We work with a fund at the moment that plays funds with different types of businesses, and they're asking questions of their customers. And the current scores that are coming back are really low, and they're panicking, and they're coming to us and going, we thought these guys were really good, and they got a 40% score. And we said, yeah. And they will do for another 2 or 3 years. And your job is to work with them to get that up to 60 and 70 and 80 over the next 4 and 5 years. So I don't have a really good answer to that question in terms of the accuracy of data, but I would say it's unless you're reporting for regulatory purposes, it's almost not the point. It's more the endeavour and the influence that you'll apply to people in your value chain over time to make improvements. But yeah, there's lots of people out there. There's loads of them that will help you with the tracking of it and the measuring of it, and there's software systems and all kinds of stuff out there as well to help with that. So if you look, there's no shortage, but it's more about making the little changes over time with your value chain, I think.
And even online, just websites, probably from those very consultants and that with getting started. There's lots of that out there. Like, they may differ somewhat from each other, but they do typically give some pretty, basic starting points that are there for everyone to give it a go, and then,
But when it comes to decarbonisation, though, there is a core protocol. The greenhouse gas protocol is what everybody, at least there is one standard that everyone is adhering to. So that is good news. But the data is an issue. So in my area, people are buying in data from third-party vendors. Yeah.
Thank you. We are now in the interest of time, we're going to hand over to Emer. He's going to order us for the next part. But the good news is our panel will be involved and around to be able to answer any questions directly.
Okay, so I hope you've all enjoyed the first part of our evening, and thank you to the experts on the panel. I for one, have taken a lot away from all their expertise and experience, and some practical tips, I think, and that's very important, I think, for any audience and group to go and bring those tips and initiatives back to our own spaces. So thank you. Okay, so for the next part of the evening, while we're still in this room, and we hope you have some energy in the reserve tanks, and before we go and enjoy the drinks reception, we want to put some questions out to you. You can remain in your groups and your tables, And we just want to put some questions to the floor, get your own, your own thoughts, your own insights, especially from hearing from the panel. And these are all ESG related topics. So I'm going to lead this table here. Alison is going to lead table 2, Elaine is going to lead table 3, and Kathy is table 4. So
thank you very much. Lots of discussion happening. So my name is Ciara Lamb. I'm Head of Operations at Compliance Institute. We're delighted to be here to support the EWPN Network event. So we're going to go to each table and just gather some feedback. So I'm going to start with Kathy. And Kathy was looking at how does or could your company motivate your end customer to act in line with ESG and create bigger impact. So Kathy, what did your group come up with?
And we actually didn't get through all 4 of our bullets, so we got through 2. So I'll try and summarise, and actually do jump in if I misquote or misrepresent anybody. So our first question was, how much is it the responsibility of the end customer to steer the corporate or the business, and how much is it the corporate's responsibility to steer the end customer? So which direction should it come? And to summarise, I think the conclusion was it needs to be both. So it needs to be from the business, but also from the customer. But we're seeing the drivers in different directions. So it's necessary to get a critical mass of business to change, and that will bring customers along with them. So it does need to come from both. And we looked at the customers and the type of customers, and we started off discussing how demographics are a differentiator, and that perhaps younger customers are more bought in. Although I did argue back that I thought that arguing for my generation that actually we're very bought in as well, the older, because, and someone mentioned the young grandparents. Can I say I am not a grandparent? So, but yes, it's actually it's a bit more patchy, but younger people are influenced very much by social media, and that is something that probably influences them more than the older generation, and they're getting a lot of messages. It was also raised that it's interesting to see how the cost of living crisis will impact progress in this area, because while it is, it's very easy to make the moral case if someone is, struggling financially, and if there is a more cost-effective option, perhaps it's, that's, a luxury that's going to impact progress in this area. So, we were saying that the more transparency will help both businesses and customers. And again, back to the generational issue, it's interesting how younger people are, almost naturally, it's by design, or, that they're a bit more enabled in this area, because they're not, for example, buying DVDs. They stream and they rent. They rent their services. And stage of life is an influencer. And how Aideen was mentioning how Gen Z and millennials will take pay cuts in order to be to work in areas that are more that can prove their credentials in the ESG space. We also noted that there can be unintended consequences while we want to do the right thing. And we, for example, but some habits like online shopping, where you have a lot of returns, there's that drives a lot of traffic on the road. So those aren't things that you think about when you press, buy on your online, when you're online purchasing, but it is something that is an unintended consequence, or it's down the line consequence. So then we went on to bullet 2, and we had actually, I'd say, disagreement here, which was very good. And this was on which is better, self-reporting or mandatory reporting. So we had a little bit of, a debate, which was good. And one side was very much definitely mandatory. But the counter argument of that was, how practical is reporting, and especially when you go into the value chain and you're trying to get your suppliers, and how can you standardize that as well? I hope I'm representing you correctly here. And then we concluded that, with greenwashing being a huge risk and cynical operators coming in and exploiting perhaps customers, lack of expertise. There's not, there's very few experts out there, and they could target customers, and that could, that there's a deficit there that can be exploited. We decided that ultimately done is better than perfect, to quote Aideen, and I think it was Sheryl Sandberg. I don't know if she coined that, but it goes back that far. And then Azaria was saying that in the funds industry, she's seeing that they're looking at the broader impact just beyond the regs. If I capture that correctly, Azaria.
So being able to demonstrate how ESGs add value to the end investors.
Yeah. So that was where we got to. So yeah.
More than we got to. So we were table 2. So what part do the different levels in any payments business have to play in promoting or assisting on an ESG agenda? And then how can employees or senior managers, the board and stakeholders play their part? So Emer, do you want to feedback?
Yeah, and please, guys, jump in, because I'm not sure if I put the notes properly in order. But anyway,
Do you want the mic?
oh yeah, sorry. So I suppose we looked at from, in terms of any payments business. So overall, I suppose we spoke about how initiatives could be big, how initiatives could be small, and then brought it down to the various buy-in that will be required from the board or the shareholder or the employees. So I suppose from the board point of view, it's very clear it needs to be part of the strategy. Boards need to strategize be clear on what they want and what they want to see out of an ESG strategy, and there needs to be that leadership to drive it, and in setting those goals and sustaining those goals and keeping themselves accountable for those goals. From a shareholder point of view, I guess we spoke about the cost of ESG and recognizing that there is a cost and there could be an impact on the bottom line, but equally there could also be a positive impact if you're coming from the investor side of it. From an employee point of view, we spoke about how we can, how I suppose coming from boards and shares, we need to make sure it's built into the whole hiring process, it's built into the PMD process, that we should have every employee should be held accountable for targets. It should also be linked to remuneration, and because employees have the ability to influence, so let's use that throughout all levels of the payments business. That's it. I was trying to write notes quickly. So does anyone else want to add anything that I might have missed?
Actually, just the unintended consequences piece about how some initiatives that we think, like the convenience of tapping the phone, if people don't have the financial education to understand, well, where's this money coming from, or things like buy now, pay later, which again is being seen to drive overconsumption and the whole fast fashion. It's almost the drug of those sort of websites, in that, I'm going to say 9 shirts, I'm not sure which size or colour, and I'll buy one, I'll send the rest back. And which actually ends, a lot of companies aren't actually set up to get the returns, so they end actually being burned or dumped. So there's an element of, and I work in product and payments, though that line of Owen's of, where's the bad in my value chain, but perhaps where's the bad in my product, if I don't think about how it's going to be handled in the non-happy case.
Anybody else? No? So table 3, then that's Elaine. So is promoting an ESG agenda harder or easier for Fintech, Paytech, payment services companies? And what works well and where do the difficulties lie?
Okay, so we had different opinions on this table. So some of us thought it was easier for fintech companies or payments companies than the big companies like banks, because banks have the legacy issues of bureaucracy, red tape, the long value chains. Startups have the chance to set the tone, the mood, and the communications, and then customers can take that forward. A startup's more fluid, not always at a mature stage. Some of us said about the valuation. It assists with the valuation of a startup if you have an ESG strategy. It helps with investors. But then we had differing opinions, and again, this is all from experience of people at the table. Startups that are not at a mature stage, the focus is on growing the business. So ESG is a luxury rather than a must-have. You know, the importance is to grow the business and, you know, make profit rather than focus on ESG. I'm hoping I'm saying this all correctly. And unless the investors are pushing that strategy, it's not always a priority. So I think we concluded as investors get younger, it should improve people's focus on ESG strategy. Maybe we're being a little bit, but that's, I think, one of the sentiments of the table. Is anybody else anything to add?
No? Great, thank you. And finally, Alison, table 4. Should government and or the central bank take an active role in pushing the ESG agenda within the financial service sector? And what should the government central bank do or not do? That's a big one.
Well, I outsourced to Jenny. So Jenny. Thanks, Alison. I owe you a few, I guess. So I'll summarise some of the commentary here, but please step in. So after that very long question, we decided a very short answer is yes, there should be a more active role. And then we kind of explored that further. So I suppose the first part of the conversation was around there needs to be consideration of the type of organisations that the central bank will be looking at, or the government. You know, smaller firms having more challenges than larger firms, and maybe different requirements depending on what stage or status your firm is at. We spoke about, I think Mandy spoke about, then from a governmental point of view, the government have a massive role in incentivising certain behaviours and sectors. So one of the examples given was around the transport industry, and, you know, looking at how that can be, payments can be removed, or cash, I guess, removed from that, and the government being able to push that agenda and also drive awareness of consumers, and that, you know, there's different stakeholders in different parts of the payments and transactions, and the government have a role on the consumer side. The other part of the discussion then was around the central bank, and we were saying, you know, the central bank should consider how it can more actively reward the good and encourage, you know, the approach taken. We did speak about mandating levels of reporting. I think there was probably a little bit of difference of opinion around what should be mandated there. We were speaking about the Dear CEO letter that came out there towards the end of 2021, and saying that, you know, certainly started conversations across the industry, probably more conversations than have been had before, and it will drive awareness within the firms. But while the Dear CEO letter is all well and good, it may be helpful to have some kind of high-level guidelines from the central bank, which will give some suggestions and some guidance for firms around how to approach it. And also then organisations would want to know what parts of E and S and G they want to tackle, and what's within the sphere of control, I think, which is what the panel were talking about earlier. But again, noting that the goal here around increasing discussion, because at the moment it's not something that's regularly discussed across the industry on an ongoing basis, and to accept that our initial assessments of compliance or standards mightn't be great, but to understand that it's an evolution and a journey. I think one of the challenges then also that came into the discussion was that there are a number of different initiatives in place across businesses and firms separately. So there's, you know, initiatives around the environment, there's different CSR initiatives, and maybe different governance initiatives. And we spoke about, could that be brought into a broader framework to support firms so that it's more tied up? And we were talking, actually, one of the examples I was giving is around if you're a manufacturer and a producer of certain types of goods, there's the WEEE framework that you have to adhere to for getting rid and managing your waste, electrical waste, and some kind of framework around that to kind of tie up, I guess, the E and the S and the G might be really helpful. And then probably towards the end of our discussion, and a really good challenge was, what do we know? What is the biggest impact across payment firms? So where do we impact most negatively in terms of environment or sustainability or governance? And what's the research that's been done? And I think Visa have done some research on this, and there are some other areas, but I guess we spoke about, probably in the absence of any
empirical information at the table right now. We're talking about the movement and storage of cash and the production of cash and the move away to digitization and digital payments being, a driver there, and also then data processing power, and saying if they become the core priorities, then would that be a way that organizations and the central bank could focus on those key areas? But knowing what it is that's driving the impact in those areas would be a really good start. And I think that was it. Is anyone else good? Okay, that's it. Thanks very much.
Okay, that's great. Thank you very much. So just before I hand over to Alison, I just wanted, I suppose, just give you a little update on who Compliance Institute is. I'm not sure everybody in the room knows. So we were formed in 2002. It's our 20th anniversary this year, which we've been celebrating. And we were set up by a group of compliance professionals who felt that there was a need for compliance professionals to have a network to call upon and to also help them upskill and develop their skills in compliance. So over the last 20 years, we've developed a number of training programs. So we've 10 programs at the moment, starting from level 7 to level 9 on the NFQ. We're about to introduce our 11th new program this year, which was in collaboration with Sustainability Finance Skillnet and IFS Skillnet, and is actually a professional diploma in sustainability finance for compliance professionals. So that will commence in Q4. And just, I suppose, another couple of things that we've done. Last year, we introduced a podcast series, which Alison has contributed to, so thanks for that. And that's on our website if you want to check it out. And Anne as well on ESG. And then we set up a number of working groups. So we have a number of working groups in data protection, financial crime, consumer protection, and they're made up of industry experts, and they provide insights to our members. And we've just set up a Fintech and payments working group and also a D&I committee. So if you're interested or you'd like to get involved, please do talk to myself or Michael or Cathy here, and Seamus. I keep on forgetting people. And we'd love to tell you a little bit more about ourselves. So thanks very much, and over to Alison.
Ciara, thank you very much. Before I release you to the very lovely refreshments that have been provided by the Compliance Institute, let me just sum up some of the points. No, I'm not going to sum up the points from the day, but there are important points that you should take away from this. And one of them is that we've recorded this session here, so we are going to release a podcast, and we're going to release a report of the discussions. So please do look out for that material and pass it on to those who weren't able to come today. Secondly, I want to remind, well, you might already know, but if you're not already a member of the EWPN, please do sign up on the website. The individual membership is free, and that gets you connected in with all sorts of things. There is an opportunity for you all. So the part of the networking is to encourage women to take opportunity to promote their voices and to be heard. The EWPN is meeting in November. It's our first in-person conference in a while. It is in Amsterdam, and they are currently looking for speakers. So absolutely everybody in this room could have an opportunity to speak to a conference, and my challenge to you all is, as it is to myself, put yourself forward to speak and get a nice trip to Amsterdam. It really is truly a lovely, lovely conference. So please do consider that very carefully. Let me think, where are we going next? Thank you very much, A&L Goodbody, for hosting us here in this venue. It's really lovely. Wait till you see the next place that we move into. It is amazing. You'll enjoy the refreshments. Thank you to Aideen as well, in particular. All the panelists were brilliant. And I'll thank you all very much individually, but Aideen, that you got us, what do we call it, Tappy Tag. Tappy Tag is business cards that are virtual. Can we call them virtual? You see, so you can, and I don't know if you noticed, but at the first slide on our screens there was that there are 5 to be given away. And if you look under your seat, you might have a gold star, which will entitle you to a Tappy Tag business card. Woo, lovely, brilliant. So please do check under your seat. For those who've got the stars, well done. For anybody who scored some chewing gum well done as well. We're finding all sorts under these chairs. Panelists, thank you so much for your time and expertise. It's been a real pleasure to have you on your expertise and knowledge here. And to everybody else, thank you for coming and sharing your expertise. We will now move to the refreshments. And I should also remind you, don't forget to claim your CPD points, which was kindly got secured for us by Kira at the Compliance Institute. Thank you.